An indicator or chart that I like to reference from time to time, particularly during the bull market, is the long-term holder supply of Bitcoin. This data represents wallet addresses that have held an amount of Bitcoin for 155 days or more. I will leave a link to the chart in the description for you to reference now while watching this video and on your own time, as I do think it's a cool tool to have, and soon you'll see why once I start breaking this down. Like and subscribe for more content like this, and sign up to our partner exchange CoinW, with whom I've set up an exciting campaign with, where you get literally free money bonuses for just signing up and other simple tasks. They're non-KYC and non-VPN, so regardless of where you're from, even the US or Canada, you can trade on the exchange with no worries. With the long-term holder supply, what I find really interesting is that since the all-time high of last cycle at 69,000, the holders had been slowly but surely increasing, going up and to the right for a very long time since. This is different from previous cycles where the supply would start to be slowly accumulated only well after the top was in. Could this change in trend perhaps explain why the sell-off portion during this bull run is also different? As what we saw in previous cycles is once that steep divergence between price and supply occurred, the trend continued that way until the tops were put in. So specifically in 2017 we can see once price tops the amount of sellers' bottoms, and we get that mean reversion where they trend together again slowly. Same thing in 2021, you get that initial top at 65,000 and bottoming of long-term holders, where it then snaps back together. But this time around, it's been the least aggressive divergence between the two. In other words, the fact that Bitcoin started getting accumulated as soon as it did, and now not being sold as aggressively as it typically does, reflects one fundamental change. The trend has shifted toward holding Bitcoin versus simply using it as a swing trade for profits. I also assume that the Bitcoin ETFs are playing a big hand in this, where they're not exactly looking to quickly get in and out of positions, so their ability to hold is likely skewing the data a bit. But conversely, when outflows begin, that'll also reflect quite strongly in this chart. So even though this cycle is clearly different from the previous ones where the decoupling is not as aggressive, do not mistake this for a new paradigm or anything of the sort. The significance of what we're seeing here has not yet invalidated what occurred in previous cycles. There will come a period where price trends up higher and the long-term holder supply drops in accordance. A big point of this video is to in fact show you that we've now entered this zone, which is an extremely strong indicator that it's time to go risk off soon. In both 2017 and 2021 it took 6 months after the split to reach all-time high. 6 months from the time it happened this cycle in early February would be August. So in all probability yet another difference from what we've been seeing. It's an interesting question to ponder what it means that this time around it's taking longer than usual in both the x-axis in terms of time and y with the price and supply. Is it bullish or not? There's also the small likelihood that we've got this going on, the small divergences along the way that snap back together without full proper expansion. I doubt it, but something to consider. Another difference this time around is how early we got the selling. In the previous cycles it happened well after the halving, taking as long as 6 months to a year. This cycle, however, it occurred 2 months prior. So going back to that idea I just mentioned, for those saying we top next year Q4, what if this is just a fake out, perhaps you can call it? The gap closes, they continue trending together, and then in April-May 2025 the jaws open, where if it does so aggressively, it'll be much more in line with previous cycles occurring after the halving and about 6 months before the top. It's possible, and I've had those arguments presented to me. I'm totally open to that interpretation if it does play out. But my perspective, and I guess the point of this quick video, is to say that's fine if that happens, but that's all a hypothesis based on limited history. The reality right now, however, is that we've got the opening. I wouldn't be so quick to fade this and see it as a fake out. It takes a year at most to revert back to the normal trend, which would put it in February of 2025. Is that confluence for a Q1 top? Maybe. But again, it's already happening, so we're sort of in the middle of it all right now. Have a game plan accordingly, which for me personally is yet another reason to sell sooner than not. If you have any questions, I don't have a Telegram or Discord, but you can message me on Instagram, there's a link in description. Like and subscribe for more videos like this, and I will see you all soon.